Very good. So let's begin the session, everybody. Welcome to the session one more time. Today is February 6, 2020. We're getting together today to do some intraday trading. We're going to be looking at the currency markets. We will be focusing on the majors. Obviously, this is where we find the greatest liquidity, which is always useful, but certainly important when we do intraday trading. So we'll be doing that. You'll see my screen switch to the charts in just a minute. You can see my name. You can see my email in the bottom part as well. If you ever need to contact me, if you have any question about the session or anything else, you can certainly send me an email using that email address, okay? But anyway, before we start, real quick, disclaimers. The following video clips demonstrations are for educational and instructional purposes only. Tradewithufos provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you must not agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And that's the disclaimer. Therefore, we can now say the session is properly introduced and we are ready to trade. So in front of us, you can see multiple charts. I need to explain all of these because some of the charts got the black background, some of the charts got the white background. So I need to guide you and lead you into why is it like that and what is the purpose and what are we doing with all those charts. Also in parallel, you can see here I'm sharing my phone screen where you can see I got the MT4 platform ready to execute trades, which as long as the market brings us those opportunities meeting our rules, we will certainly be executing those trades together if you want to join me. If not, you will see me do those trades, okay? Why am I using my phone to execute? Well, very simple. I'm tricking my own mindset. Trading is a psychological game, as we know, is a very emotional game. So in order to keep myself more focused, I use the computer screen to do the planning and I use the phone to execute. So I switch device when it's time to execute so I don't mix up the planning of the trade versus the execution. Okay, just a little tip there that may help some of you as well when it comes to managing your own emotions. Okay, so a quick one as well. Today we are in February 6th, so we are doing intraday. I will see you again on February 10. We will do swing. Okay, so we are doing swing, then we'll do intraday again. So we keep moving from intraday to swing, back to intraday, back to swing. That is the game that we are playing together, isn't it? So what's the difference between swing and intraday? Where in the intraday sessions, we use lower time frames, okay? Versus when we do swing, which is not today, okay? When we do swing trades, we're gonna be using larger time frames, okay? So one style of trading is gonna be more relaxed. The other style of trading is gonna be more, let's call it accelerated. And it's certainly all valid. And the process, as you will see, actually is very similar. The biggest change is going to be the time frames that we use, but the process is quite similar. Before we start today, it's always good to be aware of what's going on out there in the form of news. So today, I'm looking at New York time zone here. As you can see, I think that we would all agree that New York probably sets the reference worldwide for financial markets. So I'm using New York since everybody in the group is located in a different place in the world. By the way, I'd love to know where you guys are located at. If you could type it on the chat box, it'd be very, very nice to see. Very nice. And again, basically today we had a lot of information related to unemployment or employment, depending on how you want to see it. And they were not the most impactful news in the world. You can see orange color. I mean, certainly orange color is not a bad thing, but red color is when normally we get the greatest peak of volatility. Okay, so knowing that this has happened around 30 minutes ago, okay, around 30 minutes ago, you can see when looking at the chart that, some markets started picking direction and, many times all those things certainly have a lot to do with the news. So the idea is to get together as we're doing today to identify those opportunities and take advantage, okay, of market movements, no matter when, to be honest, but certainly when there is a news that is, applying or really activating, turning on some market, certainly it's more fun to trade. And what I mean by more fun is more lucrative, okay? And now on the other side, we also need to manage the risk, which for sure we need to do. And you will see me today execute all trades utilizing at least three components, which is going to be an entry component, a stop component to protect my risk, and a target component to collect the profits. Okay, I'm going to be doing all of that. And again, we haven't run too many sessions together. Okay, we started with the Trade with UFO series last week. Okay, so therefore, I'm going to spend a little bit of time. Hopefully, I can do this in 2 to 5 minutes maximum, because really what I want to do is to trade, but at the same time, I want you to understand what I'm doing. Okay, so very quick. Okay, notice how we got charts with the white background and charts with the black background. Okay, so we have two types of charts. Also, we got two tabs. Okay, two tabs. So tab on the top here. Okay, and another tab here as well. Okay, so if I switch from this tab to the next tab, notice here we got 4 charts. If I click on the next one, we got 3 more. And if you think about it, so basically all of this is the majors. Okay, so we are talking about the Aussie US dollar, the Euro US dollar, the Pound dollar, the Kiwi dollar, the US dollar Loonie, the US dollar Swissy, and the US dollar Ninja. Okay, so we got all the currencies that are known as the majors. I'm pretty sure most of you, probably all of you, are aware of this. Okay, but I just wanted to point at this first. Okay, what else? As I said, white background charts on the top, black background charts on the bottom. Why is that? Because each color has a different purpose. Using the black background, the key purpose will be to answer what I call question number 1. What is question number 1? Question number 1 is to answer first that is it time to trade or not? That's the first question to be answered, which comes together with if so, should I go long or short? Okay, so in other words, is it time to trade, yes or no? And if so, what direction? To the upside or to the downside? So you will see me how I do that in the bottom part of my screen. And once I have done that, then I will look at the top part of the screen, which is the white background chart, to answer question number 2, which is, okay, so which price do I buy at, and which price do I sell at, so I can plan my entry, stop, and target. Okay, but it doesn't make sense to look at the prices for you to trade unless you know if the market condition is allowing you to trade, yes or no, and if so, which is your highest probability direction, long or short. Okay, so I'm going to be using the bottom part first. The bottom part basically will give us a go, no go, and the moment we got the go, then we'll work on the top part of the charts as well. Okay, that's the goal. Okay, so let's begin. Okay, so let's begin. Let me utilize the US dollar, Canadian dollar. Okay, by the way, you can also see the currencies I'm using here. So US dollar, Canadian dollar, 3-minute time frame on the top, 15-minute time frame on the bottom. Let me write it down so it's going to be more visual for you guys. So 15 minutes in the bottom, 3 minutes on the top. Okay, that's the setup I got for all my charts. You could certainly use other time frames. Okay, it would not be wrong. Okay, it would be absolutely okay. But at the same time, you know, if I use larger time frames, I make myself more slow pace, and I want to be very active. If I was to use lower time frames, given the decentralized natural forex, you know, if I was to use like the 1-minute time frame, well, you know, I would say that even the 3-minute time frame is really borderline with how low you should go. So I would suggest to stick with 3 and 15 as the lowest time frames to be used. Okay. So anyway, let's begin. So I'm gonna focus on the US dollar, Canadian dollar. Let me zoom in the block chart first. Okay. And notice that I have a tool running here called Auto Climate. Okay, this is a tool that is gonna basically tell me what the climate is. Is it sunny? Is it rainy? Is it time to trade or not? And if so, what direction? Remember question number 1. And the way I'm gonna read that, okay, and you saw me do this if you join any of my prior sessions, but again, we have not run this for too many times, so I'm gonna explain it again. So the dots, notice how sometimes the dots in the bottom could be thin, and sometimes the dots could be thick. So if the dot is thick, it means the climate is confirmed. So you have a well predefined direction. And if it's blue, it means the direction is to the upside. And if it's red, it means the direction is to the downside. Okay, that's what basically this means. In other words, this is kind of like my go, no go. If I got a thin dot, it's a no-go. If I got a thick dot, it's a go, and the color tells me about the direction. But that's not all, because picking direction in a market is very important, but everything got an ending point. Nothing lasts forever, isn't it? So we need to look at statistics. And here where the climate stats are. In such climate, which is a climate to the upside, notice that we got 1, 2, 3, 4, 5 blue dots. Okay, here we got number 5. In other words, the duration for this climate has been 5 candles. Okay, and statistics suggest, notice the up arrow on the left and the down arrow in the middle. So down arrow we ignore because it's an up climate. Okay, so we focus on the up arrow on the left, and notice it says 5.09. So we have a habit, which is always to round up, okay? To simplify a little bit, okay? So we're gonna make it 6. So think about what this means. It means that the climate, based on stats, is supposed to last by 6 candles, and the current climate has been running already for 5 candles, okay? Well, given the fact that we got still 1 minute and 57 seconds to go since when I froze the screen. So 1 minute and 57 seconds to go for this candle to conclude, and then we can absorb another candle, so that would be 6 out of 6, right? So basically we got like around 17 minutes to still trade in the up direction on the Canadian dollars. So in other words, I got a go, and the go tells me that it's okay for me to trade in the up direction for the next 15 minutes and a half, okay? Next 15 minutes and a half. Notice, right there, 15 minutes and a half. Notice that in 20 seconds, we're gonna have a new candle, and you will see that number 5 become number 6. Okay, so we may be able to catch a trade for around 15 minutes. That's a quick one. Let's see if we found the trade. So question 1 was, is it time to trade, yes or no, and what direction? The answer is yes, it's time to trade during the next 15 minutes, and the direction should be up. Okay, that's the answer to the question, okay? And therefore, now we are dealing with question number 2 here using the upper part of the chart, which is, so what price should I buy at and which price should I sell at? And here to be mechanical, okay, and not only that, also to stack odds in your favor, okay? We're gonna look at the average price. I got an EMA, okay? You guys may have noticed I'm using an EMA. And if you're wondering about my EMA, I am using EMA 9, okay, EMA 9. Meaning that I'm using a 9-period EMA, so averaging the price of the last 9 candles. And notice how the average is 132.82. I mean, there are many reasons for me to use the EMA 9. Unfortunately, I don't have time to go over this right now, so you'll have to stick with me on that one. You know, maybe in a future session we can talk about that, okay? But 132.82, that's my reference price, okay, which is more or less here. 132.82 is just above 80, okay? And what I'm gonna do on the top now, notice how I have another tool here called Auto UFOs. So it's disabled though. You see the little eye that is being kind of like crossed over. So I'm gonna click on the eye to uncover my Auto UFOs, okay? And what did I just find out, okay? Well, what I just found out is, one sec, let me go ahead and undo the countdown. So what I found out is that I got a UFO, okay, which I need to explain what that is. I have a UFO going from 84 to 80, where certainly 82 is right in the middle. So now notice how price went above the EMA, supported itself from the EMA, bounced. Price went to the EMA, supported itself, bounced, okay? So I'm looking at the same thing to happen again. Okay, EMS are certainly relevant because they may add on-field orders to buy in the market. Okay, they may add on-field orders to buy in the market. Okay, hopefully you know what I mean when I say on-field orders, which, by the way, on-field orders, okay, not orders already filled. That cannot do anything anymore. It's already done. But the on-field orders are the ones that will move the market in the future that hasn't moved yet. Okay. So those UFOs, which is the acronym for on-field orders, is what will move the market. And as I just said, the EMA may be a source of on-field orders at 132.82, but most importantly, that little UFO there tells me that as we speak, they are already unfilled orders in the market. So as the Canadian dollar is coming down, 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 the moment it comes here, those unfilled orders are going to kick in, and potentially the US dollar, Canadian dollar will continue, after dropping here, will continue moving to the upside. And I want to catch this move. I want that one. Okay. And I'm still on time based on the climate as we discussed. Okay. So I'm going to start planning on a trade, entering a 132.84. I'm going to run it up to 85. And I'm going to place a stop below 80. Okay. And then I need to find out my target. Okay. Remember, entry, stop, and target. So let me look at my target in the 15-minute time frame. Okay. I'm turning on auto UFO on the 15-minute time frame as well. Let me maximize. And here it says that 132.90, okay, 132.90 should be the target in this trade with the Canadian dollar, US dollar, Canadian dollar. Okay, so US dollar, Canadian dollar, 132.90 doesn't look like it's a far target, so that's not too appealing to me. But at the same time, if the trade is likely to work well, and everything else is according to plan, so nothing wrong with taking this trade. Okay, so let me find out if we're gonna execute this trade or not. Okay, so I'm gonna use the calculator here on the right, click on buy. Okay, I'm gonna first input the entry price, which I said I'm gonna make it 85. I'm gonna go for the stop, which I said I'm gonna place my stop below 132.80. Okay, but I need to give myself a little bit breathing space. So I'm gonna give myself 3 pips of breathing space. I'm gonna make it 77. Okay, and then finally my target is gonna be 132.90. I'm noticing that this trade is not gonna be worth it, guys, because I am risking 8 pips to make 5. Unfortunately, the target happens to be a little too close for this trade to be worth it. Okay, so one thing you could do, and the risk is that we may miss the trade, I could go ahead and change my 85 to be 82. Okay, so I'm gonna buy a 132.82. Okay, that means that I am buying in the middle of this green zone where all the unfilled orders are. That's exactly where the EMA is. Okay, and the downside of doing that is that I may miss the trade. Price may come almost to the EMA, kind of kiss the EMA without kissing it, and then go back up, and then in this case I miss my trade. Okay, but at the same time, if I do this, then I would say it's worth it, because then I am risking 5 to make 8. It's not an amazing trade, but I'm gonna make 1.6 times more money than the money I would make if I was wrong. So I will say that that's good enough, and therefore I'm gonna place an order. The last parameter for the order is the risk of the trade. And here, of course, all of us in the group have a different account size. Everybody is a complete different story. Therefore, it's difficult to pick up a number. So what I'm gonna do is I'm just gonna suppose or assume that everybody's trading a $10,000 account, and I'm going to use $10,000 just because it's a round number. And I'm going to assume that everybody is utilizing a risk parameter of 1% risk. 1% of 10,000 is $100. So I'm just going to type $100 here. Okay, I will type $100, and this is telling me that for me to take this trade, I need to go with 2.6 lots. Okay. 2.6 lots, 2.65 lots, okay? 2.65 lots in MT4 would be input as 2.65, okay? 2.65 lots really means 265,000 US dollars against the Canadian dollar. But again, in MT4, we just input 2.65. I'm sure the majority of you are using or have used MT4, and you know this, but just in case, keep that in mind, okay? This is the value for the trade in dollars, and this would be the MT4 conversion for me to input the trade using the MT4 terminology, if you wish. Okay, so when I do that, I'm going to bring my phone into the main screen. I'm going to tap on US dollar, Canadian dollar, and I'm going to place an order to buy limit. I'm going to go for, I'm going to input this manually. So that's going to be 2.65. That's the size. We said we're going to buy at 82. We said the stop will be 77. Am I correct? Yes. And we said the target is going to be 90. Okay, it's going to be 90. Okay, so this is the trade. You can see my parameters are there. So I'm just going to hit place. Okay, and the order is now in the system. So I got an order there. They're waiting to get filled. Very quick speed of the light because we need to plan more trades. So I am entering at 132.82. Okay, 265 is the size. 265 is the size. Okay, my final target is 90. My stop is 77. Okay, so I got all the parameters in place. Okay, and now if I'm wrong on the trade and the Canadian dollar comes to the green UFO and instead of bouncing from it, keeps going down and stops me out, well, obviously that's not a good news, but the good news is that the most I will lose is $100, which is what I want in this particular trade, okay? Cool. So back to the charts. And let me see questions. Very nice. I'm looking at your countries, UK, Canada, Ireland, Namibia, Qatar. Wonderful. Canada. Very nice, guys. Thank you for sharing. Thank you for sharing where you guys are from. It makes me feel closer to you guys in this particular case, okay? Now, also, remember, this trade we just planned here on the Canadian dollar is valid for the next 6 minutes and 10 seconds. Because 6 minutes from now, we're going to have a new candle on this chart. It's going to be candle number 7. 7 is more than 6. And therefore, you would be buying in a climate that has stretched too much. In other words, you buy too high. And could something high go higher? Yes. But is it likely when it already went beyond what probability suggests? Then the answer is no. So then I would cancel the trade and go for another one. Okay. What else do we have? Good. So let's keep looking at all of these. What else do we have? We have here in the middle the Swiss franc. Okay, so let's take a look at the Swiss. Okay, so the Swiss franc, same story. We're going to do the same analysis first. Is it time to trade? Yes or no? And if so, which direction? Notice that we have a thick dot, a blue color. So this is a confirmed climate to the upside. This is candle number 1 into climates that should be of 5 candles. Remember, I always round up. So 426 becomes 5. Okay. So 1 out of 5 means that I can still have like 4 candles and a half, if you wish, where each candle is 15 minutes. So I could still catch 1 hour plus trades, with the US dollar Swiss franc, okay, which is actually better than the US dollar Canadian dollar. So let's go ahead and see if the theory that suggests better is also in the practical terms, the reality, which we will know as we begin utilizing the upper chart, okay, to see if we can have a proper entry price, target price, and stop. So again, we're going to use the 90 MA as a reference. This is 97.44. Using 97.44 as a reference is right there. This is 44. So the question is, I'm going to turn auto UFOs on. Notice is off. You see the little I that is crossed over. Okay. By the way, I didn't say it. I'm using TradingView here. I'm sure that many of you realize I was using TradingView. In case you guys never use TradingView, simple. Go to tradewithufos.com/trading. Let me do that again, /TradingView, okay? Tradewithufos.com/TradingView, okay? And when you get in there, you will see a membership called Basic, which is free. And this allows you to use TradingView for free with real-time feeds and everything else for Forex, for cryptos, and many more markets, okay? So nice to have. You can also have your app on your phone in case you never use it. It's pretty cool, as you can see, okay? But anyway, coming back to the chart, okay? I just wanted to, while we go through the session, I also want to help you with little tips and tools in case you didn't know of their existence, okay? So turning on auto UFOs, okay? Turning on auto UFOs, and notice what I got there, okay? I got a green UFO there where you can see I got 44. And what happens? So I got 44 and I got 44, okay? So that's looking good, okay? That's looking good. Now, when you look at this 44, notice how, we got green line, and here is a green line, and here's a green line. So basically, you got what I call grouped UFOs, okay? You got at least here 1, 2, and 3 UFOs. Okay, let me draw this better for you guys. 1, 2, and 3 pockets of on-field orders to buy, okay? All the way from 44 all the way to 30, okay? And here I got a problem, okay? So I'm gonna abort this trade and you will see why. My problem is that even though it's nice to have multiple pockets of unfilled orders to buy, because really this increases the probability that when the Swiss franc goes back to the EMA, that EMA will push it back up, okay? Way increase of probabilities thanks to multiple pockets of orders. But the problem is that also, if you were to think of the distance from my entry, which is 44, all the way to my stop, which needs to be below 30, so now we are talking about 16, 17 pips for 16, 17 pips of risk. So if I want to make double of that, I need to shoot at least for, I don't know, like a 40 pip trade. I'm not saying it's not possible, but let's take a look at where the target would be in the case of the US dollar Swiss franc. Okay. You know what? In the case, actually, now that I said that, as I am saying it to myself, in the case of the US dollar Swiss franc, just like if you were to short the euro, probably you know that the Swiss franc and the euro are very. Oh, I just moved to. Sorry, guys, I just changed symbol by mistake. US dollar Swiss franc. Yeah. So the US dollar Swiss franc and the euro are very similar markets. Okay, and they move opposite. So the euro is dropping a lot. Therefore, the Swiss franc is rallying a lot. And therefore, in the 15-minute time frame, I got no red UFOs. I'm looking at red UFOs above price to use them as target, and I got none. So what if I move to the 1 hour? I'm pretty sure I will have none either. Oh, actually, look at that. I do. I was wrong. So yeah. So where are my UFOs? 97.75. So if I enter at 44 with a risk of like 15, yeah, you know what? It works. It works. It's okay. I think it's an okay one. So let's go for it. You know, I had a different view a minute ago, and this is why it's really important not to even have views. Okay, let's be mechanical. Just act based on what the technology tells you instead of thinking too much like I was doing. So 0.9775, this is where the target should be. Okay. So I just made a note in a piece of paper. I'm going to go back to the 15-minute time frame. I will even turn off auto UFOs. We don't need auto UFOs here anymore. Okay. And now I'm going to go back to the chart, and I'm just going to input all the parameters. Okay. So entry will be 44, stop below 30. Okay. So let's input, okay, a buy order here where the entry will be 44. Okay, and I'll make it 45 to not miss the trade. Where the stop would be below 30, you saw me use additional 3 pips of breathing room, so I'll make it 27. And then we just said the target is going to be 97.75. This is the one thing I just wrote on a piece of paper. So what's happening? I'm risking 18 pips to make 30. That's a 1.6 to 1. Is not the trade of the year, but given the probability that we have, certainly. It's okay. Okay. Again, not the trade of the year, but certainly good enough. So I'm going to use the same parameters as before. Okay. I'm going to assume I want to risk $100 per trade. Again, same assumption. Let's say we have a $1,000 account and you want to risk 1% per trade. That's $100. So that's why I type $100. If it's $1,000 account, so then you type 10, okay, instead of 100. So, you know, everybody could adjust that at their own based on their own risk management rules. Okay, but certainly this trade would be a valid trade to be executed. By the way, I'm going to execute this trade, but also notice how we got candle number 7 on the Canadian dollar, okay, and price never came, okay, never came to our entry expecting the move. That never happened. We are now dealing with candle 7. We are now a bit late to the party to collect more of this move, okay. The probability is not on our side anymore. And even though it's always, let's say, a little bit of a pain that you spend some time putting a trade in place and now we're going to cancel it, well, the fact is that the nature of the market is dynamic and we better adapt to the dynamics of the market instead of force a trade, which is not high probability any longer. So what am I gonna do? Very simple. I am going to first cancel my prior order, delete the order with a Canadian dollar, delete. Okay, and now I'm going to be ready to execute the new trade we found with the US dollar Swiss franc. Okay, hopefully we'll get filled on this one. The market is the boss, so we'll just follow what the market says. Okay, we're gonna go here with 0.54 for the size. 0.54, as you can see. Entry is going to be 0.9745. Stop is going to be 97.27, and the target is going to be 97.75. This is what we said, isn't it? Yes. So place order. Uh-oh, I made a mistake here. Typing the entry price. Here we go. I'm like, why is that? Yeah, 97.45. Here we go. So place order, okay? And now, always good practices. Let's review everything on this trade. So what do we have? First, the size, okay, 0.54, 0.54, okay, that's good. Entry, 45, 45 is the entry. Target, 75, 75 is the target. Stop is 27, 27 is the stop. Okay, so we have everything in place. So now we just need to wait for this trade to play out. I'm gonna turn on auto UFOs on the CAD. We don't need them. The auto UFOs in the case of the Swiss franc, remember, the UFOs were down here. So we are waiting for the Swiss to drop by 3 pips from 48 to 45, get into the trade, you know, and based on probabilities, we should be able to catch a move. Also, by the way, trade management rules apply when you enter the trade. You may trail your stop, you move the stop to break even, you may scale out. I mean, there are many styles on how to manage the trade. Since we are spending limited time together, at least for now, I'm just focusing on the trade plan, okay, which is basically is the entry, okay? But of course, there is more to it, okay? Good, so we'll be watching this Swiss franc trade, and in the meantime, we'll go check on the yen. So what's going on the yen? Well, on the yen, it's very simple. We have a no-go. Why? Because the dot is thin, which means the direction is not clearly identified, okay? So entering now basically is guessing or hoping that something's gonna happen, but you don't know which direction clearly, okay? So in other words, probability is low, so we don't guess, we don't hope, we don't do any of these. We only trade when we have a scenario that is defined with probability on our end, okay? By the way, just to give you a few more tools, earlier I was commenting on, a minute ago, I was commenting on trade management, okay? Here in the YouTube channel, okay? Let me refresh that. So here in the YouTube channel, you can type just Trade with UFOs, okay? There is a section which is sharpening, okay? Those are videos which are greatly educational. Be ready, because each of those videos is like 2 hours long each, okay? So be ready. There is a pretty powerful session here with review, and a pretty powerful session here with planning, and, you know, also review questions, and here also reviewing. So there is a lot of addressing how to manage the trade, how to enter the trade, and in those videos I get into a little bit more detail when it comes to what I'm doing, which hopefully you follow me. But in case you were not to follow me, okay, then you know, you can go ahead and use the YouTube channel as I just said. So we should be in a trade here, guys. Okay, we should be in a trade. Yes, we are. We just got filled on the US dollar Swiss franc. Okay, we just got filled. It started slightly moving in our favor. This trade is making $3.88 right now as we speak. Again, that means absolutely nothing. This is just the beginning of the trade. But notice how it touched that line where the UFO is, and on-field orders kick in. You know, the EMA is working, the climate is working, the on-field orders are working, $7.20. So anyway, we'll see what happens with the trade. You know, certainly that means absolutely nothing. It's too soon to be too excited. It's just the beginning part of the trade. But I'm just saying, if you guys followed me, I would expect that some of you are with me in the trade. You may be using paper money, you may be using real money, you may be using a greater size than me, you may be using a smaller size than me. All of this will be depending on your risk appetite and so on, okay? But anyway, so we are there, you know, hitting the average, on-field orders kicking in, and the normal little fight when you get into a trade and it does whatever, and then it goes, okay? So, or whatever, and then it goes against, okay? That's why we have a stop even though the move to the upside is more likely to happen than the move to the downside. Okay, so we'll see what's going to happen. I'll come back later and review. Cool. So let's change the desktop. Okay, let's change the tab. So let's begin looking at other markets where opportunities may be available. Okay, let's begin with the pound. Okay, so we have the pound here: pound, euro, Aussie, Kiwi. Okay, send setup, 3-minute time frame above, 15-minute time frame below. Okay, notice that in this tab I got the US dollar on the quote. Okay, US dollar on the quote, and Kiwi, Aussie, euro, pound on the base, where the other tab was the opposite. Okay, US dollar on the base, US dollar on the base, US dollar on the base, and we got the yen, we got the Swiss, and we got the CAD on the quote. Okay, and the reason why I do it like that is so I could be aware of market correlations. Okay, because let's say I was long the CAD and long the Swiss franc, then I'm double long the US dollar. Okay, and that could be adding double the risk for your trade. Okay, okay. So so let's continue looking at this and see what we've got. So let's begin with the pound. So when looking at the pound, I'm doing the same thing I did before. Okay, I'm first looking at the climate. So the climate is confirmed. We have a thick dot, so it's confirmed. That's good. It's red, so the climate is down. Okay, and when it's down, then we look at the middle part, okay, which statistics suggest that climate should last for 6 candles. 5.7, it's 6. And the current candle is 1. So potentially this could last for 6 candles, 15 minutes each, okay? That is an hour and a half. So we could be catching trades that could be potentially long lasting, okay? That's nice, okay? That's nice, but it doesn't mean we have a trade yet. We still need to find out more about the entries. By the way, remember when I told you that I'm using, there are so many things I want to share with you guys. So the tool I'm using here on the bottom is called Auto Climate, isn't it? Okay. So this is a tool that you can get for free if you use the following website. Let me type it for you guys. Okay, so it's www.tradewithufos.com, and then you add /join, okay? And then you pick what is called the Basic Plus. Okay, you pick Basic Plus. It's a free membership. There is an $8 payment for activation, but then it's free. Okay, and then you can have that tool if you feel like it. Okay, some of you may have already trend analysis techniques that are working very well, and therefore you don't need to use it. But I'm just saying, if you appreciate what this tool is doing for you, you can have it running on your trading view, pretty easily. Okay, cool. So we have the climate, right? So we talked about it. So now what we want to do is, as we did before, we're gonna look at the EMA as a reference. Okay, let me go ahead and this. Just want to zoom in big time there. Okay, so what's the EMA value? The EMA value is 129.64. That's the EMA value. Okay, 129.65. Actually, is right there. Is where the price is as we speak. Okay, well, actually, it's a bit below. Okay, it's a bit below. And the question is, do we have any UFO at this price point? Okay, so I'm turning on auto UFOs, and unfortunately, we do have, as you can see, a green UFO, okay, but what I'm looking for, because remember, this is a down climate. So what I'm looking for is here on this chart, I would be loving if there was a UFO here, okay, but instead of blue, okay, I would love it to be red. Okay? If I had a red UFO right there, that would be great, okay, but we don't have any. Therefore, with the pound, we don't have a trade as we speak. Okay, certainly it's certainly worth it for you to come back later on and again double check if an opportunity has arisen, because everything, as we said before, is dynamic in the marketplace, but not as of yet. Okay, so what else do we have? Okay, what else do we have? So let's take a look at the euro. So with the euro, oh, sorry, guys. I just hit the wrong button. I wanted to zoom in here. Here we go. So I am zooming in, okay? I am zooming in here. And with the euro, what do we have? So with the euro, we have a setup, which is a confirmed down climate, okay? It's candle number 2 into climates that should be lasting by 6 candles. So in other words, you could catch an hour and a half trades here where the climate already started 2 candles ago, which is 30 minutes. So we can still catch 30-minute trades to the downside, okay? But only if we have the proper setup, which imply precision in the entry and higher probability. And this means that around the EMA, which is that price 10999, okay, we need to find out red UFOs on the top chart. So I am turning on auto UFOs, and notice how unfortunately my UFOs are at 110.04. Okay, 110.04 is where the UFOs are, and therefore, I don't have, again, just like earlier, what I need is a red UFO here, but it's not available. Okay, and I'm not gonna make up a trade because technology, okay, it's technology does things better than what humans could do, isn't it? It's like when you use a GPS, for example, technology can do things that humans we cannot do. You go to a new city, you've never been there, so certainly, a GPS would do a better job than a new tourist in a city using a paper map, isn't it? So same thing in the markets, okay? If you don't have a UFO there, don't convince yourself that it could be a good time to take a trade. Don't do that, because the evidence tells you there are no unfilled orders as of yet. They may be later on, and if there were to be, then a new UFO would show up here. Okay, but the fact that it's not there yet, it means that there is no unfilled orders as of yet. Okay, therefore we are not gonna execute this trade with the euro, and therefore both the pound and the euro for now are a no-go. Even though it was looking okay, but not enough okay for us to take the trade, okay? So therefore, I'm gonna look at the next one. And what's the next one? The next one is the Aussie dollar. So with the Aussie dollar, we got 2 dots into the climate, okay? 2 dots into the climate, thick color red dots. So that's 2 out of 5.68, okay? Which is 6. So again, same as the euro. Okay, if everything goes well, this comes to around the average, reacts to the average like many times happen, and then you ride a trade for like an hour or so in the opposite direction. Okay, so way to do it if you want to be an active intraday trader. Okay, next Monday we'll talk about the swing trades, which is a different style of trading. Okay, but today we are talking about something quick. Okay, but again, even though in the theory world is great, in the real world we will know if we have a trade or not the moment we turn on auto UFOs. So we will be looking at 50 as the reference price, and guess what? In this case, we do have at 51 unfilled orders. Okay. Now the evidence tells us, hey, not a crazy thing to take a trade. And by the way, we have a collection of unfilled orders, many pieces of unfilled orders here. So the probability is actually quite great. My concern, as I said before, is that now I need to have an entry around 51. My stop needs to be above 58. So I'm going to have like, let's say 12, 13 pips of risk, something like that. So I better find a target which is far enough for the trade to justify itself. And it's possible. Okay, it's possible, but instead of guessing it, we're just gonna turn on auto UFO on the 15-minute time frame. And what we're looking for now is green UFOs. Okay, here we go. Yeah, and you know what? Yes, it is. Nice trade. With the Aussie US dollar, okay, with the Aussie US dollar, on paper, this trade is the best of today, at least for now. We got 0.67, 30, I'm going to call it 31 for my target, okay? So I'm going to shoot for my target to be here. Okay, remember, we're in a climate, okay, which is supposed to last 6 candles. So if the Aussie comes back towards the average, okay, and bounces from there, it should travel all the way to here, because the unfillers to buy are here, and they're going to act a little bit like a magnet. And by the way, when it comes here, it's likely going to bounce, and therefore this is the perfect place where to take profits. Okay, like it happens many other times. Okay, like it happens many other times. Price went down, come back to the average, and then goes down. Right. So I'm trying to mimic that scenario, but I'm not just trying to guess it or mimic by guessing. I'm trying to add odds in my favor by turning on auto UFOs combined with the EMA which is 67.49, which again, an EMA, the M is for moving, so it's a moving average. When this market goes up, the EMA will move to the upside, and that 50 may become 51, 52, whatever. You got plenty of on-field orders above 50. Certainly, all that range is a good entry point. So let's define the plan for the trade to see if really it makes sense. So 67.51, okay, that would be your entry, okay, which is right there, 67.51. Okay, the stop, I'm going to type it here. Okay, and the stop would be above, okay, above 58, and you saw me at 3, so it's going to be 61. Okay, so 67, 61. That would be the stop. Okay, so we are risking 10 pips on this trade. And the target, as we just defined a minute ago, when I said this is probably the best trade of the day, okay, is 67.31. And this is a trade where we're risking 10 pips to make 20. That's a 2-to-1. The other trades we had, or we found, at least for now, if you keep digging, you'll find more. But the ones we found until now were like 1.6 to 1, something like that. This one is a 2-to-1. Again, it's not the trade of the year, but it's the best of the day so far. Okay, and therefore, you know, we're gonna be happy putting this trade in place. Okay, so I'm gonna bring my phone to the screen like we did before, and we're gonna place an order, and then I wanna make a comment to this trade and the other one as well. So tap on AUD USD, new order. Oh, by the way, one thing I forgot. The size of the trade, okay, I forgot to type here $100, okay? Again, all of you will type a different value, okay? I mean, that one was easy because, you know, since the risk is 10 pips and $100, so that's gonna be one lot, okay? So 99.99, that's gonna be one lot, okay? So I'm gonna make this to be 1, okay? So 1.00, or if you want to be that precise, you can make it 0.99, it's fine. Really, that's not too important. So we're gonna, sell limits, okay? Sell limit on the top. Then entry price, we said 67.51. The stop, we said 61. And the target, we said 67.31. Okay, so 31, 61, 51, and 99. So place order. The trade is open. Here we go. We got an order waiting to get filled. Okay, so let's take a look. Okay, let's take a look at reviewing that I did a good job. I didn't make any mistakes. 0.99, that's 99. The entry, which is 51, that's 51. My target, which is 31, that's 31. And my stop, which is 61, that is 61. Okay, so yeah, I got everything okay. The trade is in, it's all good. Okay, so few comments. Okay, few comments. And by the way, the US dollar trade, the US dollar Swiss franc, you can see still running. Probably price went a little lower, okay, so it's showing a little bit of negative PNL at this moment in time. Yep, so you can see how, you know, it went lower than what we wished for, okay, but now it's bouncing back, okay. So here now we are talking about trade management, which, by the way, that's one of the things I wanted to comment with you. So notice what just happened with the climate here. Okay, it's changed. It was blue when we started planning the trade. Typically, when a climate defines itself, then it propagates. This is what happens most of the times. Sometimes for more, sometimes for less, but sometimes the market is a bit more erratic, like it happened now. So when you have a change of climate like that, what is the right action to be done? Well, the best action to be done is that get out, because you had a reason to be in the trade that has been invalidated. Isn't it? We got into this trade because the climate was up, but the climate just changed to be down. Okay, so good news. I mean, it's not a good news. It's part of trading. But what's the good news? In this trade, I was risking $100, and now I have an opportunity to get out of this trade. I'm just going to close it, close order, where my loss is going to be $22 instead of $100, which is the total amount I was risking. So get out of the trade. Don't be emotional. Don't become emotionally attached to the trade and proud of the plan you had, or you know, be convinced that, oh, but look at that, still, you know, it looks like it's an uptrend, whatever, it may go back, but you know, it may go back. Okay, it's just an assumption. So it's better now. The climate is down. That's evidence. Let's plan to short on the Swiss franc. We'll not do it because the session is basically over. But if you want to do it yourself, okay, that's the mindset I would suggest that you develop if you don't have it yet, which is now evidence is telling you time to short. So let's plan to short. And if you make a profit to the downside, and let's say then the climate changes again back and you got blue again, then you'll get long again later on. But instead of sticking with the trade where you have a piece of evidence that tells you that one of the components of the trade has changed, and you should not ignore it, because then that would lead to undesired results. Okay. So anyway, so basically I'm talking about trade management. Okay? I'm talking about trade management, which is certainly important because notice that this trade started as a 1.6 to 1. Okay, this trade started as a 1.6 to 1, the one with the Swiss franc. And what does that mean? That if you lose, you lost 1.6 times less than what you would have made. And if you profit, you make 1.6 times more than what you have made. But remember, all of this was with an assumption of risk of $100 in my case. So what happens? I ended up with $22 of loss. Okay? And $22 of loss is 22% of my risk. In other words, it's like you take the 1.6 to 1 trade and now you made it so much better. Okay? You made it so much better. I mean, 1 minus 0.22, that's, sorry, 1 minus, oh, okay, I know what's happening. 1 minus 0.22, okay, that's 78%. It's like you made your reward to risk ratio 78% better, okay? Let me do that again. Here we go. Which is like your trade now, it's like it would be equivalent to 2.8 to 1, almost 3 to 1. Okay, why? Because the change of climate told you get out before you get hurt more, and therefore you improved the risk management of the trade. So we are talking about trade management, which is just as important as entries, okay? Because the sessions we are running are, 45 minutes to 1 hour, we are quite short, and we never got to spend time properly, I don't know how to put it, like in a proper educational environment, going through a class or something like that. So then what happens is that basically there are multiple things that unfortunately I don't have time to address every single angle of a trade. And some of you, I certainly expect that you are quite advanced and experienced, and you understand very well when I talk about trade management and so on. But for others, maybe some additional support would be useful for you guys. Okay, so just keep that in mind, because it's key to plan a trade properly, but it's also key to manage it properly. Okay. So in this case, we're gonna be concluding the session in just a minute. Remember, we are looking at this trade where we expect the Aussie dollar to rally to 51, and from there to begin falling. This would look like that, and from there begin falling in the 15-minute time frame. You still got room for the climate to propagate. Okay, so all good for the Aussie dollar. Done with the other trades that we planned for today. But you kind of see the process, isn't it? You've seen me use multiple tools. I said AutoClimate. You can get that from the website I shared with you before. I would like to share another website with you as well, in case it is useful for you, which is, let me do it here. Here we go. So www.tradewithufos.com/products/in action online. Okay, that's the link. Okay, it's a little long. I'm going to leave it on the screen for a little bit so you can make a note if you want to. Basically, this is a link where you can take a look at an online class I will be conducting from February 24 to 28. Not all of you need that. Okay, some of you may not need it at all. So in that website, you can see the content of the class and so on. And you may not need it, and it's fine. I'm just saying, for some of you that you may be in learning stages and you may need more additional support, you may want to join me in that particular class. That would be a class, meaning that it's not going to be live trading. It's going to be more in the educational side, with no rush to go into the process. Okay. And then, when we get together here in the FX Trade sessions, you can follow more accurately if you happen to be a bit newer to trading. Okay. This is for you guys as an attempt to help you a little more efficiently, okay? But anyway, having said all of that, if you guys have any question, I'll be happy to take a look at your questions before we conclude the session. We just got, in theory, 3 minutes to go, but again, depending on the amount of questions that may be coming in, I'm here for you guys, so I'm happy to spend a few more extra minutes if needed. When it comes to planning trades, of course, with 3 minutes to go, I don't have time, so I'll stop it here. Is it possible to take a look at gold? Yes. You mean, for example, XAU USD? XAU USD? Okay. You mean that market, right? Yeah, very good. Yeah, very good. So yeah, so with this particular set of time frames right now as we speak, okay, we are dealing with an up climate, okay, up climate, 2 candles out of 5. So this climate potentially could last more, okay, same story. But again, depending on the UFOs, okay, so let's turn on the UFOs, okay, and not looking good, okay, it's looking more like a change of climate is going to happen, okay, because the next UFO is available at 1562. Which 1562 is way lower down here. So certainly is not aligned with the EMA, which is the white line. Okay. So in other words, those field orders to buy are too far down and probably are not gonna act as per plan. Now, in the other hand, if you wait 1 minute and 08, let's wait 42 seconds to go. Okay. We may get a new change of climate. Okay. Let's see if that's the case, because it's falling quite hard, okay? So technology is looking at multiple parameters of the price movement, and we may have a red dot, okay? Let's see, 25 seconds to go, so we'll see. And if we have a red dot, okay, we could use that red UFO as an entry in a new down climate, okay? So 16 seconds to go, 15 seconds to go. The climate should remain the same throughout the trade. Very well said, Ruben. That would make you safer, okay? So 5 seconds to go, 3, 2, 1, and 0. So let's see what we got. Here we go. Oh, here we go. So you know what? Not yet. Okay, price action is telling you that yes, indeed, we got red show up, but notice it's a thin dot, like it happened here. Thin, thin, thin. Okay, so it's not properly defined and may go back up, very violent. Okay, so no time to trade this particular gold market yet in a defined, confirmed direction. But it's a matter of 15 minutes. So 15 minutes later, it may be a different story. And in the meantime, you can go ahead and take a trade with either other commodities or other currencies. Okay. So yeah. So that's what we have for today. Do we have to check for the climate all the time to manage the trade? Yes, Ruben. I mean, my philosophy, and I'm sharing my philosophy because I certainly recommend you to think about it, and if it does make sense to you, to apply it as well, because I believe my philosophy is actually made of common sense. So in my philosophy, the markets are something dynamic. They are always changing, especially since in the 90s, computers started trading the markets. It was not human beings anymore. It's all about computers nowadays. We all know it, isn't it? So everything is active, dynamic, changing. So you gotta go with the market. You need to adapt. And therefore, you have to be watching the markets in a regular basis. And if the climate changes, if the UFO changes, if whatever you use in your trading changes, then you have to either replan a new trade or cancel a trade. And in other words, adapt. Okay? You cannot just plan a trade 2 days ago and just stick with it just because you plan it and it's your trade and you love it because it's your trade. I mean, it's true that it's easy to get emotionally attached to the trades, but this is not the way to trade professionally. We get in trouble if we do that. So my proposal to you is that you detach yourself from those emotions. I'm not saying that's your case, probably not, but your question certainly kind of inspired me to add this additional comment for the ones of you that may be newer to trading, and sometimes you feel a little, let's call it, too proud of your plan because you spend 20 minutes to plan the trade and now you are very proud of the plan, but now the market changes condition, you should cancel it. And sometimes because we are so proud of what we do, then we resist canceling it. Another way to say that is that we fight the market and the market is bigger than us. So we should not fall into that and just be emotionless, okay? So just be emotionless. You're gonna take millions of trades in your life, a trader. Who cares about the next trade? Is that making sense? We need to develop a carefree state of mind type of mindset for you to trade properly, okay? We don't marry trades, we just date them. I get your point, Tamer, I get your point. Very good. So anyway, everybody, real pleasure to have joined you in the session today. Again, my email is here in the bottom. I share with you a few links during the session as well. Hopefully, the application, the links, the URL, everything has been useful to you. And I will see you again on Monday. So keep up the good work in the remaining part of the week. Enjoy the weekend and see you then. You got 5 pips out of the Swiss franc trade. That is a good management, Tamer. That is a good management because I didn't myself. So congratulations to you. Well done. Take care, everybody. Bye-bye.